What's up? Welcome to video number 2 of this 4-part masterclass training. Anyways, guys, we covered so much in the last video, and I saw your comments, and it was super cool to see that you guys are excited and actually learning this stuff. I wanted to take what we learned from video number 1 and kind of apply it into a bit more realistic feel, where we can actually learn how to protect ourselves from stock market crashes. So anyways, I just want to come on here and say hi. Anyways, like before, I'm going to share my screen for a bit. We're going to go over a couple slides, a couple concepts. Then we're going to go straight into my screen. I'm going to share my screen, and we're going to actually show you some stuff that literally nobody else shows. And so again, I'm going to do my best to over deliver and teach you stuff that you've never learned before. So anyways, guys, let's get into this. If you haven't already, put your phone aside unless you're watching it on your phone, and let's get into this. So take out a notepad and pen, and here we go. Let me remove my face and let's jump straight into it. So in this video, we're going over how to automatically protect your money during stock crashes without having to guess tops or bottoms, losing a lot of money, or being stuck to the screen all day. This is beginner friendly, and this is video number 2 for those who are joining for the first time. So a quick recap of what we covered in video number 1 is how trend following is the key to profiting from the stock market. Whether you are an investor, swing trader, or a beginner, expert, whatever you are, trend following is your key to making consistent profits. And also how to follow the trend using the TDBS system, and I gave you numerous examples for that as well. And yeah, so if you haven't already, you should watch video number 1 because literally we cover so much in there, and it's literally awesome. I over deliver and I teach stuff that literally I've charged money for, so you should check that out. Anyways, if this is your first video, I'm just going to do a quick recap here. Trend following is the only way to reliably and consistently profit from the market, and it is also the best way to protect yourself from a stock market crash, which is what I am teaching in this video. So again, trend following is something where you basically just follow the big waves of the market. You're following the big money, and you're finding ways to actually put your money in a stock or in an asset that's actually going to increase in value. And so again, there have been reports over 2 centuries of mathematical research and proof of it working, and a more recent one of a century of evidence of trend following and investing. And this works, guys. It's been proven to work, and I taught you a system that has been used by so many others, including the turtle traders, which is a group of people who knew nothing, were taught simple trend following systems, and literally had doubled their money year over year. Anyways, here's an example of the Dun Composite, which is a trend following firm, and they have outperformed the market in a very safe way. And so again, that's kind of what we're teaching in this training. You can see here, which pertains to the video that we're actually, or the content that we're actually discussing in this video, which shows you that trend following has actually generated hefty profits during crashes. So not only do they not lose money, but they actually make money. You can see here World War I, the Great Depression, stagflation, 1987 crash, financial crisis, stuff like that, where trend following has actually made money. And so I'm going to show you 1, and first and most importantly, how to protect yourself, and 2, how to make money on the downside if you want. Because again, when it comes to the recession and all these things, millionaires are made during these times when they know what to do. And guys, the most millionaires are made out of depressions and recessions. And I want to teach you how to be the next one. If you want to be the next millionaire during the next recession, make sure you're taking notes and staying tuned. All right. So a little bit about me, if you haven't watched yet. I've helped over 5,000 people master trend following and more easily profit from the market. You can see here's one of my trend following courses. You can see here almost 6,000 people inside. I've helped people. Here are some testimonials from people all over the world, from the United States to Estonia to Scotland to UK to Germany to London. I basically help people across the world with this. Not only that, I have over 300,000 people who follow me on social media for daily stock market updates and stock tips. So I'm not just some guy on pretending like I know what I'm doing. And also I use trend following myself because I will never teach something I haven't done myself and or used. So I actually use trend following myself to safely beat the market. And I've been asked to talk about trend following on big podcasts as well. For instance, millennial investing. Sorry, I can't talk today. And so yeah, I did a huge thing with them, and they also had an article written about me here. So yeah, I generally know what I'm talking about, and I can't wait to actually share that with you, because my goal in almost every video is to over deliver and to give you something that you can walk away with that will actually help you increase your returns safely. So anyways, enough about me. Let me share my screen and jump into what we're actually going to learn here. But again, just like last time, let's get into the topic game plan. What are we going to cover for today? We're going to go over two different case studies. First, so case study number 1, we're going to go over how to actually predict crashes, because again, that's really important, how to get an accurate reading of when a crash is coming. Then we're going over a second case study, which is actually the best stocks to buy or hold during a crash, which is also very important. And then number 3, we're going over stop loss and automation rules, which is crucial to staying alive. And so again, literally Like I said before, if you haven't already, go to a quiet space, close your doors, get out a notepad and pen, because I'm going to teach you things that people charge a lot of money for and that people keep a secret, and I want to share it all for free. So anyways, guys, let's jump into this. We're going to get into case study number 1 and case study number 2, and then I'll share my screen and get into the rest. So again, case study number 1, how to predict crashes. All right, well, as we covered in the TDBS system, we're looking for trend, we're looking for to dip buy. If that doesn't work, we're looking for a breakout, and if that doesn't work, we have a stop loss set. And so again, that is our TDBS system, and we're going to use that system and apply it into here. So what we're doing here is this is the impeccable stock band, which is an algorithm that I created. It shows you when stocks are trending and when a crash is coming, but how you can do this without it is very simple. Like I said, we are assessing the trend, and when the trend breaks down, that's how we know. And so a very simple way to do this, as I mentioned in the last video, is a easy way to determine trend is a 200-day moving average. And so for instance, here's that line. That gray line will be your 200-day moving average. If a stock or if the S&P 500 goes below the 200-day moving average, then we're going to see the market have a really high chance of crashing. And so that is a very easy way to know. Again, the 200-day moving average can give a lot of false signals, but for the average person, that's going to help them get an idea of when a market will crash. Now, again, when I share my screen, I'll actually give you a specific index that most people don't know about that will help you. But here is just the essential basics of it. So again, once you know a stock market is going to crash, once you know it's highly likely, aka it's below the 200-day moving average line, then we can start preparing and prepping our portfolio to take advantage of this opportunity. Now, again, how this works with the impeccable stock band, which I'll actually show you how to get access to in video number 4, will actually be trending down, and then we can actually dip buy it on the way back up. Because like I said, remember, we are looking for dojis on a dip buy opportunity. We can see here dojis start to form. We start to slow down our pattern, and that's a great sign to dip buy. Anyways, that is how to kind of predict crashes, and you can see here, I'm not just making this up. You can see here, here's an example you can see here, this is from February 28, 2020. I said here my stop loss on SSO got executed, so I locked in a gain on a long position, and then I said I'm personally buying a small entry position on a short. So basically, I knew the short was coming, and I also recommended for my people to actually look into inverse ETFs, go to cash, and look for the volatility ETFs. Why? Because it was giving us signs in late February that the market was going to crash, and we were starting to prep for that. So if I actually go back here, you can see here, this is February. We started to know around here that the market was going to crash, and so we started preparing our accounts for that. And I'm going to teach you the best stocks for that in just a second. But anyways, and then you can see here, we can see here March 26th. I said, guys, this is a great time to buy stocks because it looks like we're starting to dip and hit that reversal. So you can see here, this is where we kind of alerted that we need to watch out, and then this is where we alerted that it's a great dip buy opportunity, and then we got into the upside. So again, I just wanted to show those facts and those dates to prove that I'm not looking back on hindsight and saying, yeah, look, that worked in the past and that's what I did, because I'm not trying to BS you. I'm not trying to make stuff up. My goal is to be the most honest marketer and most honest stock person ever, because again, the stock market is full of a bunch of scammers, and that is the last thing that I want to do. I want to actually teach you guys stuff that works, and so I just wanted to kind of prove that this works before we get into the teaching stuff. So again, here's an example of how I did it in real time and found these opportunities and helped my users profit as well. So anyways, case study number 2 is stocks for crashes. So again, what is the best stuff to go into during a crash? So your first best option is going to be an inverse ETF. Now, why is this? An inverse ETF is a great opportunity because it does literally the exact opposite of the market. So if we can go back here, when the market does this, inverse ETFs will go up. So every time the market goes up, inverse ETFs go down, but every time the market goes down, inverse ETFs go up. And so again, if we're buying here an inverse ETF, then when the market crashes, that inverse ETF will actually go up in value. And so because of that, those are some great stuff to put at least a partial piece of your money into. As you can see here, I recommended about a 20% of your portfolio into inverse ETFs. And so that's kind of where that came from. So again, make note of these. You have SDS, XPXS, and TECS. So this is going to be for the S&P 500 inverses, and these are going to be inverses for tech. Now again, there are so many other inverses, and again, if your portfolio is more weighted towards something else, then you should buy the inverse of that. And what do I mean by that? okay, let's say your portfolio has a lot of oil stocks, or your portfolio has a lot of energy stocks, and so you want to make sure that you probably should buy some inverses to the energy sector, so that when the energy sector and those stocks go down, you're going to offset those losses on proportion or proportionately. And so because of that, make sure you understand what your portfolio is doing to kind of give you the best inverse ETF advantage. Other things that go up during crashes are commodities, right? Gold, silver, metals, those things go up because they are tangible assets, and that's just what people see. Basically, they're just known as insurance. So when the market goes down, gold and silver and metals tend to do well. Also, hot sectors during the crash. So again, even though a crash is happening, there are still hot sectors that are going to do well. Think about our market crash in March 2020, right? What did well? Well, all of the pharmacy tech, all the health tech, all those things performed really, really well. And you could have made a killing from those as well. So again, in addition to inverse ETFs and commodities, understanding what the crash is behind and why, and finding the hottest sectors during that crash will give you some opportunity. Here's an example from my user, Ben, who's actually from England. So it's cool to have someone from across the pond, if you would say. Anyway, so he said, I sold my PayPal shares for a 31% profit. Again, this is back in 2020 during the pandemic crash. I was like, a 31% profit in a pandemic environment. That's literally insane. He held the stock for literally only 2 weeks and made a 31% profit. Who here would love to hold a stock during a crash for 2 weeks and make 31% profit? You guys should all be saying yes to that, because that is literally insane and amazing. So here is the exact trade that he took. Basically, this is what he did, right? Remember the TDBS system? He assessed the trend. Long term, the trend was up. He missed the dip buy opportunity with the perfect doji candle right there, right? So he missed the dip buy. So what's next? He goes to the breakout. And so again, the breakout is right here. He bought the breakout, and then he sold here at the highs where it was starting to get rejected at. And so basically he made a 31% profit in a little less than 2 weeks. And so that's literally insane. If you don't know what I'm talking about with the TDBS system, you definitely need to go back and watch video number 1, because it's going to explain it all, which is basically trend, dip buy, breakout, stop loss. Anyways, guys, that is literally what Ben did, my user from England, and he literally did it and executed it perfectly. And so that's what I want for you guys to do during the next crash. All right, so enough of me giving you case studies. Let's actually go through and give you some real examples. So screen share time. Let's dive deeper into this. So let me jump over here to this other tab here. So this is the S&P 500, which is the overall market. Like I said, when we're assessing trend, we can go to the indicators and add a moving average. So we can add our moving average to the 200-day moving average. If I come in here, we need to adjust it to 200. Just link to 200. Again, you should be able to do this on any platform. I'm on the TradingView platform, which is completely free to use. Again, you can also do this on Yahoo Finance or your broker or anything like that. As you can see here, you can see when the market starts to crash, when it starts to get below this line, and so that gives us an indication when it's time to look for reversals. Now, here is an index that most people do not know about, and it's actually very, very important. And so this is something that I want to share with you. It's called the S5TH. So you can see here, it's basically the S&P 500 stocks that are above the 200-day moving average. So it shows us the percentage of stocks that are above it. So again, we can at max get to 100, and we can at lowest get to 0, because again, that's kind of how it works. So let me just make sure I'm explaining this correctly so it makes sense to you. So when a stock is above the 200-day moving average line, for instance, like SPY, this is above, that would be counted as a yes. If a stock is below, that would be counted as a no. And so it's basically determining the number of stocks in the S&P 500, about 500 stocks, and determining the percentage of them that are above the 200-day moving average, right? And like we mentioned in the first video, when a stock is above this line, that means it's bullish. That means it's going to continue higher. That means it's going to do well, and it's going to make its investors money. And so with that, if we can see the number of stocks that are above that, and that's going to do really, really well, right? The more stocks, the higher the percentage of stocks above that line, the more bullish the overall market and the more money we can make. And so with that, this actually produces or gives us an indication of when the market will start to crash. Why? Because it shows us when all the stocks in the market are starting to dip and come down. And so again, with that, you can see here around February 20th, we had a huge gap down, a huge red day, and this gave us an indication that a crash was coming before we even knew it on the overall market. And so this is a great understanding, guys. Literally take notes of this. Go to tradingview.com. Go and save S 5TH. This will give you a huge advantage on understanding when the market is weak. You can see here that we have these two huge red candles. That shows that a ton of stocks in the market are going below the 200-day moving average, which means they are losing a lot of money, losing a lot of value, and that's gonna show that a crash is coming up. We can also see that when it starts to bottom out, when we get towards these 0% levels, that's also a great dip buy opportunity, right? You can see here March 25th, March 26th, exactly when I alerted that level, because we can see here that we're starting to come up and we're starting to rebound, and it's only up from here basically. And so again, that's how we can see it. We eventually reached a 95, 97% level, which is amazing. Now we're kind of tapering off that, but we're still around a 75. Anything above 60, 65 is amazing. But again, this helps you kind of understand what is going on. So again, one way to do this and to set alerts to be aware is you can actually go on TradingView or your broker or whatever, and you can actually set an alert here that if the stock goes below a 65% level, then you can get alerted about a potential crash. And so those are different ways to set up alerts for that if you work full time or do whatever. Anyways, guys, that is a way to predict crashes. And if you find that awesome, like let me know in the comments. Like, go down to the bottom of this webpage and put in your comments and let me know, because I want to know that you actually like this content, because I'm sharing stuff that like no one else shares. Anyways, guys, that's how you can kind of predict crashes. You can use this to give you an advantage, and you can also use the 200-day moving average to give you an advantage of when everything is going to start to crash. So once we know a crash is coming, right, we're going to be looking into our stocks. For instance, SDS, which is a reversal play. So you can see here that during the crash back in March of the pandemic, you can see here that it rose up. So basically here around February 28th, I believe, is when I gave out that signal, right? So February 28th, and then it reached a high. That's 50% return in 24 days. Oh my gosh, guys, who here would love to basically almost like do 50% growth in 24 days? In less than a month, they grew their account by half. And that's literally insane. And that's the ability when using inverse ETFs. And so again, use inverse ETFs, use gold, use stuff like that. Remember, if you're not gonna put your whole portfolio into it, then at least put a portion to offset the losses to come. Now, ideally, you want to get out of all your positions, move into some inverse ETFs, and that is the best way to grow your account during a crash. Not only that, we know, like I mentioned before, how to identify dip buys using a doji. So once we have a huge dip and a rip down, we look for a doji, we look for some push up, and then we can catch those bottoms and profit to the upside, and having these huge returns right from here on up, right, 45% returns over the next year is insane. All right, so again, I kind of showed you how to predict crashes. Now I want to show you a bit more of stop losses, because that has come down to a huge protection factor. Why are stop losses important? Stop losses are important because they help protect your downside, right? So when you buy a stock, it can actually crash and go against you, and you would lose all the money you invested. But if we put a stop loss, then that will stop us from losing money. And so again, that is the best way to do it. So again, you can simply come to your broker, find a stock that you want to you click up here on sell, you go to your order types, and you click on stop loss and a good till cancel order. So that's kind of how that goes. Anyways, guys, that is kind of the gist of what I wanted to teach today. I do kind of want to go over some top questions though, like for those who are saying, okay, Austin, that's awesome, but shouldn't we be focusing on time in the market and not timing the market? And I completely agree and understand this argument, right? Investors are like, I need to be invested for the long term, so I don't need to sell out. I don't need to do things like this. Crashes shouldn't matter. And that is true. But I want to explain things to you. We aren't timing the market. We are not timing the market with this approach. We are seeing what the market is currently doing. Is the market currently bullish? Is the market currently bearish? And then we adjust our approach accordingly. We're not predicting what it's going to do 4 months in the future, because I have no idea. Nobody in the world has any idea. And if someone claims to know what's going to happen, then you should run away from them. So basically what we're saying is we're assessing what the market is currently doing, and then we're using that to actually make our game plan. So why should we do this? Well, because you've worked hard to save the money that you are investing in trading, right? Like, you've worked full time, you've worked part time, whatever it is. I know you sacrificed to make that money, to save it, to pick the hard choices, to not go out to eat, whatever it was, to have this extra money to start investing and trading with. And that is a lot of money to you. And like when I started, like when I lost money, like it hurt, because that was money that I worked so hard to save, and just like that, it was gone. And so that is a very depressing factor. And so I want to help you protect that money. And with that, when crashes come, like, it's also wise to have a worst case scenario, right? We know the market is going to crash, and so we need to know how to prepare to prepare for that and how to plan for that, because we don't need to be stressing when a crash happens. Also, it takes time for the market to reach break even after crashing, right? Let's check this out, right? So for instance, this is a great recovery. This recovered super fast. But as you can see here, if you invested here at 338, you can see here that it crashed. So it took it took about, what was this, 34 days to crash. But then it also took another 177 days total to actually reach back to break even. So you reach this level again after almost half a year. And so that's half a year of missing out on returns, right? Because right here, your returns stop, you lose money, you get back to break even right here, and then you start making money again. Versus if you get out here and then reinvest, you actually are able to make a 35% return on the way back up instead of waiting almost half a year or over half a year to actually make money again. And again, this was a fast recovery crash. Some crashes take forever to recover. And so again, we can go back in history and show you that. But for instance, during the 1929 Great Depression crash, what happened is it took 25 years for the market to reach break even again. On average, it takes 2.5 years. So basically what I'm saying is it pays to know when to get out of the market and when to buy in those dips, because instead of waiting to reach break even for years, we can start profiting a lot faster than that. So does this actually work? Again, like I said, there's so much evidence for this. So this is from the report written over a century of evidence of trend following investing. And again, they showed the reports of trend following and how it's doing and how it made money in almost every crash compared to normal investing. And so yes, this works. This has been proven to work. You saw the alerts that I did in real time with my users to help them profit. And again, if you don't have a game plan, then you're planning to fail. And so when the next crash comes, if you don't have a game plan set, if you don't know what you're looking for, then you will fail. You will lose money. You will freak out and your emotions will go through the roof. So if you're tired of letting your emotions control you, if you're tired of not knowing what to do, this is your game plan. Here's an example, right? Like we can see here that it just works over time. So again, guys, we covered a lot in this video, but if you're excited to finally have a game plan for the next stock market crash and love trend following, please let me know in the comment section below. I want to know what you thought about this lesson. Did you take, what was your biggest takeaway from this? Let me know in the comments below. Also, make sure to get ready for video number 3, because yes, we covered how trend following works in video number 1. We showed you how to use it in a more advanced way in this lesson today. But in video number 3, if you are still struggling to find stocks, like you have the strategy, you have a system now, but you don't, or you can't find the right stocks, or it takes you forever to find stocks, then I'm gonna show you how to instantly find stocks before they break out using some simple criteria. And I'm gonna teach that all in my video number 3 training of the third part of this masterclass, which is going to happen November 24th at 5 p.m. Central Standard Time. If you haven't already, make sure to enter your email somewhere so you get notified of the next video so you don't miss out. Anyways, guys, I will be covering, like I mentioned, the exact criteria I will use to find amazing stocks before they break out without having to spend hours in front of a screen, right? Like we all are busy, we all have a family, we all have a job, like we're busy, and we don't want to come back after a long day of work and stare at a screen for another 2 hours. So I'm going to show you how to do this in minutes. So before you go, thank you so much for watching this video. I hope you had a lot to take away from it. Again, I hope you learned that trend following is your key to success. Trend following is going to be your key to making money in the market, to safely beating the market in a reliable way. It's also going to help you not be scared of the next stock market crash, but have full control and full peace of your finances because you're prepared for every situation. Also, let me know in the comments below. Just scroll down the webpage and there's comments down there what you enjoyed about this video. And so I'm super excited to hear. Anyways, just a reminder, because this is huge, guys, we're coming up on the Impeccable Stock Software 1-year anniversary. We've helped so many people become trend followers and swing traders and see some astronomical returns compared to what they were doing. And so with that, I'm giving away a free brand new MacBook Air, free year access to the Impeccable Stock Software, and $500 cash in a sweepstakes. And again, all you have to do is enter your email to be entered, and you'll automatically get 10 entries. Now, if you do some other cool things like sharing or whatever, you'll actually get more entries to win this. Anyways, we'll announce that winner during the live of video number 4 in this series. But anyways, guys, this is literally everything you need to get started, right? Because 2021 has been a crazy year, and I want to give you all the resources you need for one lucky winner to literally set yourself up to have success in 2022. Anyways, guys, thank you so much for watching. if you haven't yet, I don't know what you're doing, but sign up for that free giveaway. Guys, thank you so much for watching this video. I will see you in the next one where we're going to cover my exact criteria for finding stocks before they break out. Trust me, you won't want to miss it.